Welcome everyone to another financial analysis video where Ted and I help you understand companies, understand their financials, look at their health so that you can make smart decisions when it comes to whether you want to invest in those companies or if you want to do business with them and you have a better understanding of what's going on there. So today, and I know I normally say this, we have an interesting company, but this one really is interesting for a very different reason, right? So today we're looking at Iconic Labs. Now, I'm going to read something out to you because Ted and I found this, quite frankly, hilarious, but also a little tragic at the same time. So if we look at that slide, right, so I'm going to read this out to you. So Iconic Labs, and this is from their website. So purpose-built for a new era of media and a new generation of consumers who behave drastically different to previous generations. Our brands and teams sit in the intersection between culture, tech, and community, well positioned to adapt, advise, and capitalize on emerging trends. Our unique position combined with our team of in-house specialists both allow us to build our own brands and also help other brands solve business problems and get fit for the digital age. Now, that is totally meaningless. So really doesn't make any sense. And, you know, in my view, if you can't understand what a company does from its own website, there's a problem here. Or at least my instincts start to, you know, there's alarm bells ringing. So I had to go to other websites to find out what exactly they do. And essentially, they're involved in the media landscape. I mean, that's quite obvious, but specifically, they're involved in the online media space. So they advise their clients on, you know, how to create content, analysis on content performance. They provide companies with weekly insights on what's working and what isn't working, both in their content and other content around the world. And they also provide creative services. So they probably help these companies create content as well and come up with good ideas in terms of the imagery, etc. So essentially they're involved in the online media space and brand elevation space here. So we're going to be speaking to them. And what I want to do is firstly thank one of our viewers for requesting this particular company for us to analyze. So Gary Smith. In fact, Gary was not the only one. There were quite a few others, but Gary was the first. So we're showcasing him here. So Gary, we're happy to do this for you. And here's the other thing that's interesting about the company. The least interesting element about this company is the fact that they have 1 year of cash runway, i.e. their cash is going to run out in a year unless they get some more funding. Now, that was the least interesting. Now, in most companies, that would be the most interesting. So stick around because truly we're going to see some crazy stuff going on here, or at least some very interesting things going on. So Ted, what do we have to share? What do we have to show to our viewers here about this company?
Well, hello, Moeed, and welcome once again to everybody. Yeah, so Iconic Labs, what an interesting company. I have to admit, I did spend a little bit longer than I usually do. So, you know, one of the things that, you know, we tend to bring to the party here is the financial analysis. It's reading the financial statements, it's looking at the core numbers and allowing our viewers then to kind of, you know, use that as part of the, you know, their knowledge of the business, of the industry, for example. But this was so confusing. I actually started to do a little bit more research on the company, and it'd be interesting to hear the comments of our viewers as to whether they agree on what I found out as to what's going on. So I'm going to bounce around a little bit on this one, and we are going to come back to the director's report and to the chairman's report a little bit later on. So first of all, here we go. Here is their income statement. So the income statement, they've managed to increase sales from 0 up to about 107,000. Okay, so they've basically 107,000. That's a billion% increase in turnover, but they started from a pretty small number. So this is their gross profit. So effectively the cost of sales is 0, and then you can see here about 2.4 million of administrative expenses. Now down to the bottom we can see down the loss from the continuing operations. So the loss in this year, 2.8 million, very similar to the previous year. However, our first interesting aspect comes a little bit lower than that when we see the profit or loss from discontinued operations. Now they're going to make a small profit from discontinued operations here, but the previous year they make a massive loss from discontinued operations. And what it suggests to me is that these guys have effectively done a pivot. You know, they've changed their business model. So I was quite interested by that, and I thought, actually, at this point, let's go and have a look at what they used to do and what they're doing right now. So I'm going to go up to the chairman's report, and here it goes. And you'll see in the first line of the chairman reports, it says, this is the final set of accounts, which covers both the shutting down of the old wide cells business, as well as setting up the operational platform from which we've built the Iconic Labs business. Okay, so basically this is a massive pivot. And if you've never heard of a pivot, it's a kind of a point where a company just says, I'm not going to do this, I'm going to do something completely different. You know, we read about businesses, you know, who quite often do those types of things. They suddenly find something, they're exploring, you know, part A, and they suddenly find that, you know, there's a real kind of seam of gold in a sort of, you know, sort of slightly kind of left field part of their business, and they pivot and they focus on that. So just so we're clear, this is Wide Cells. So this is, I think I've got the right website, I hopefully, yeah. So Wide Cells, umbilical cord blood stem cell. You know, basically they're kind of, it's storing your blood stem cells. So in terms of pivot, I mean, this is a massive pivot. This is kind of, I'm struggling to see how within their storing stem cells, they suddenly thought, actually, this is a better business model. Anyway, so they did, and that's what the old business model was looking like. Okay, so let's go back to our financials and look at what's going on in the balance sheet. So here's the balance sheet, the statement of financial position, and the assets. So they've got relatively small amount of current assets, not a huge amount. It's and don't forget, we're not dealing in thousands or millions. This is the numbers as you see them. So there's 44,000 of non-current assets, and they've got about 180,000 of cash, and then some trade and other receivables as well. So that gives them total assets of 360,000 or 361,000 pounds. Scroll down a little bit down to the equity and the liabilities. So we can see the liabilities. The current liabilities here are about 4.3 million. And the well, they haven't got any non-current liabilities. So basically they've got effectively no long-term debt, but what you can see is that they've got quite a lot of short-term debt. So that is either going to have to be repaid, or it's going to have to be refinanced, and they're going to have to pay some money to the suppliers. So just to remind you that the current assets are 316,000, and the current liabilities are 3.5 million. Okay, so this is a very, very significant ratio. So for those of you who like to do your maths on the working capital, that's a liquidity ratio of 0.09, suggesting this company is incredibly illiquid. Just while we're looking at this part of the balance sheet, let's look at the equity here. So we can see very quickly that the share capital and the share premium, this is what has been invested by the shareholders. So they've put in a combination of, you know, basically 10 million, and the company has lost 13 million, which is why they have a deficit, a negative balance sheet of 3 million. So if you put this company into liquidation, if you close the business down, these guys here are not going to get all of their money back. I would expect that the loans are secured. In fact, the loans, if they're secured, there's really no assets to be securing that loan on anyway. So there's going to be a lot of creditors who are going to be taking a haircut from this company if you close it down. Okay, let's just look at the cash flow and see how we're getting on with our cash flow. So we see the cash flow from the net cash used in operating activities 1.6 million compared with 3.5 million from the previous. Again, we've got this kind of distortion in terms of the discontinued business. So effectively, this pivot that's been going on. So they are burning cash. They certainly don't have anywhere near enough cash in the bank to be able to survive that kind of that cash burn rate. There's not a lot of investing going on. They're paying interest on the debt, and you can see the interest is actually quite high. So the interest rate, suggests that it's quite a high rate of interest, and I would expect that because it's a high risk business. And you'll notice here they've got some convertible loan notes as well. So these convertible loan notes is effectively loans that can be converted into shares. So there's the potential for additional share dilution without actually raising any cash in the future. So and that's what, and that has been keeping them alive. Those effectively the issue of convertible loan notes, and this is a kind of a hybrid form of financing where somebody lends money to the company and they can request it back as a creditor, but if the company then takes off, then they can convert it into shares. So it's a way of trying to reduce the risk, the downside risk of the shares, and gain the upside. So it's good for the investor, not necessarily so good for the company, or certainly not so good for other investors. So, I mean, we kind of look at this, just think, actually these guys, I mean, they can't be a going concern. What actually is going on in this company? So I was looking for the going concern note, and the going concern note is in there. And also looking at the principal activities. So here we see a little bit, a few comments about what the principal activities of the company are. And what was interesting about this is if we look at the chairman's report, what we notice is, so first of all, they say that they're in an early stage. They've got to try and achieve revenues and sustain profitability. And then they talk about this dependence on a key contract. And I thought this was quite interesting. So they notice that they're talking about how they're very dependent on the revenues. So it says at this stage, the revenues from Joe and her MSCs. These are the MSC is a management services contract, an MSC. So they're in. They've got contracts with a company called Joe and a company called Her. And it says. The revenues comprise a significant majority of the company's revenues, and the loss of this contract would materially adversely affect the business. Basically, that they're overly dependent on one or two customers. However, the contract entered into with Greencastle has an initial term of 1 year, which rolls over automatically unless both parties agree to terminate. This is the effect of that. This is the consequence of the company is required to terminate the agreement. The effect of this is that the consent of the company is required to terminate the agreement. There are limited grounds for termination, and they say 2 or more of Liam Harrington, John Quinlan, and or Sam Asante cease to be directors of the company. So they're basically saying if Liam, John, or Sam are no longer directors of this company, then the contracts are effectively terminated. So I thought, okay, well, that's interesting. I wonder, let's go and have a look at these guys. And what we find is that, so here are the directors, and we've got, there is John, there is Liam, and there is Sam, a slightly different name. And Catherine Lewis is their non-exec company sec, is their non-exec effectively. And it was quite interesting looking at these guys and kind of where they came from. So I looked them up, and interestingly enough, their background is from Unilad. Now, I'm not sort of big on this, but I do get the odd Unilad Bible, and Unilad, I think, is very much in this space. It's all about how do we, get images and get click-throughs and get people kind of talking about the brand. And, you see funny video clips appearing on social media. So So these three guys basically are bringing their experience from Unilad into this business and saying, look, we can make it, we can be a new Unilad effectively. And I go, okay, that sounds all right. It's a big pivot. It's quite a long way from stem cell blood storage. In fact, it is a big difference. Okay. Right, so let's have a little look. So there's a couple of other things that we want to go and have a look at now. So first of all, we've got this going concern. So there is this going concern, and it's set out on page 16. So I think we're going to go and have a look at that and just make sure that we're clear on what the going concern that the auditors also reference it as well. Okay, so here is our going concern assessment. So this is assessment by the directors, and the auditors reference it as well. And in effect, what they're talking about is booking revenues, consideration sales, etc., etc., etc. And they talk about how they're going to be doing some more fundraising as well, and therefore they say that we are confident that we are a going concern. What was also interesting is looking at those three directors and to see how much incentive they have in the business. So here we see the remuneration report, and it talks about so here's the appointment of our board of directors. So John, Liam, and Samuel, and Catherine Lewis as a non-exec, to kind of basically keep them on the straight and narrow, and make sure that they're running the business in the best interests of the shareholder. Interesting enough, John Quinlan wrote the chairman's report and the director's report, so he's he's a chief executive and chairman. So there's a kind of little bit of a breakdown in corporate governance going on there. Here's their salaries. So their salaries total about 600,000. So they're making up a significant part of the business. A significant part of the cost of the business are paying these guys salaries. And then I thought this was quite interesting in terms of their shareholdings. None of them own any shares, and I'm thinking these are absolutely key members of the business. If they leave, then the contracts fall apart, and and they don't have any shares. So I don't know quite. They talk about here they've got 6 months notice on either side of termination. So I thought it'd be quite interesting to look at Iconic Labs, and I was looking these guys up, and I came across this note on Greencastle. This is Intrado Global Newswire, who says Greencastle, part of the technology and media investment going Greencastle, has today announced details of new strategic additions to its senior leadership team. It will see John Quillian, Liam Harrington, and Samuel Reagan Asante, all formerly of Iconic Labs, join Greencastle Media Group, along with other key executives from the Iconic team. Okay, so this is dated February the 1st of this year. And then it talks a little bit about the brands, etc., etc., etc. So effectively, they've joined their customer. They've actually left Iconic. So then we go, well, who's actually at Iconic? So here is Iconic. Here's the About Us, and if we click on our team, we end up looking at we've now got Brad Taylor, who's the chief executive, Jaya, who is the finance director, but he's not actually a director, he's not on the board, and then we've got four non-executives who are listed there. So I think what the company is doing is exactly the same, but it's now got a completely different board from what it started with. So, quite frankly, what is going on at this company, it's really, really hard to work out. I think what they're trying to do is a Unilab. They brought in these new directors. It didn't work out. There's probably a lot of boardroom disputes, and they have now since left and gone to join another company. And so this Iconic Labs, which is a listed company, it's battling for survival. It was in stem cell, and you can kind of see, the stem cell, it was kind of bouncing around here, and then it just decided this is not working, and it did its pivot. It comes down here, and you can just see that, since then it's basically been going sideways, worth absolutely nothing. So the market cap of this business is £8 million, which is quite low. However, remember that the balance sheet is negative £3 million. It's got no cash in the bank. It's burning money. It's got current assets of 300,000. It's got current liabilities of 350,000. Since the accounts that we looked at, it's raised money. I'm thinking this company is only going in one direction, and I'm not convinced that that direction is upwards. That's my opinion at the moment. Now, maybe the new board of directors, they're going to bring the Midas touch. They're going to turn it around. There's a lot of money being sunk. A lot of good money after bad has been sunk into this company. I'm not convinced that it is going to survive much longer. I'm not sure we're going to be looking at Iconic Labs this time next year, Moeed.
Yeah. In my opinion, it beggars belief. Like, it's just a completely unusual situation here. And maybe the new directors can change the business, but if I was a customer, I don't think I'd be very comfortable working with them and giving them my money.
Those trade payables, are they going to get repaid? Those loan notes, are they going to get their money back? I'm not sure they want to be converting them into shares. And as I said, this is my kind of inference from looking at the accounts, doing a little bit of research on the web. But I'm sure there are people listening to this out there who are going, no, Ted, I know more about it than you. You've got the wrong end of the stick. And if that's the case, then please do add your comments into the your thoughts into the comments, your insights. If you've got additional knowledge, then please do share it with us as to why maybe this is actually about to rise from the ashes like the proverbial phoenix.
Yeah, I totally agree. And I've got to say this, in my opinion, if you're a business involved in marketing and advertising and you can't communicate clearly what you do on your website, that just feels so wrong to me. But I'm willing to hear otherwise. So as you said, if people know this business and the industry really well and want to share some of that information, love to hear that. There is one video that I recommend that all our viewers look at, and it's not similar in terms of financial structure or anything like that. It just happens to be in the advertising industry. It's actually in a very new area of the advertising industry, which is in-game advertising, which is a really, really cool thing. And that's a company called BidStack, which we actually analyzed earlier. So have a look, have a click at that video. And yeah, really interesting. Love to hear your thoughts. Like, share, subscribe as always. Ted, we'll see you on the next video. Thank you, everyone.
Great to speak to you, Moeed. See you later.